Hi, for my financial analysis, I did a report on the Cheesecake Factory. It started off in 1940 in Detroit, Michigan, with Evelyn Overton. She had a recipe for cheesecakes that was really popular, and she put the recipe in the newspaper. She eventually ended up opening her own shop, and she sold her cheesecakes in them, but then when she had children, she just gave them to local businesses in the area. So by 1972, all of her kids were grown up, and she decided to pursue her dream of opening up a shop again. So her and her husband moved to Los Angeles, where they opened up their first cheesecake factory. And then in 1978, her son David brought her bakery to the next level by opening up a restaurant in 1978. So instead of just having a bakery that sold cheesecakes, she had a restaurant with a lot of cheesecakes that they sold in a restaurant setting. So the company has grown drastically over the last few decades. It's now a $2.3 billion company. They have 214 restaurants in the United States, Canada, Puerto Rico, and internationally there's 20 different locations, such as in the United Arab Emirates, Qatar, Saudi Arabia, the Chinese mainland, Bahrain, and Hong Kong. So 199 of them operate under the Cheesecake Factory restaurant, and then they have a couple other brands such as the Grand Lux Cafe, which is kind of the same concept but just a little more upscale. They have 13 of those, and they have Rock Sugar Southeast Asian Kitchen, which is, it sells kind of the same food but with more of an Asian flair for the countries in Asia. So for just an overview of their income, 12% of their sales in 2017 were alcohol, 12% was carryout, 13% was dessert sales, and then the average check was $21.85 in 2017. So some of the items on their menus, to give you an idea, for the normal Cheesecake Factory restaurant, they have like a stuffed cheddar burger, Greek salad. The Grand Lux Cafe, they have a little higher class items such as a miso glazed black cod, Madeira chicken, spicy ginger beef. And the Rock Sugar Southeast Kitchen, they have things such as a short rib banh mi and Singapore Hannan pork. So their executive officers are David Overton, he's the chairman and chief executive officer. David Gordon's the president. Matthew Clark is executive vice president. Debbie Zerzullo is the vice president, secretary, and general counsel. And then Max Byfuglin is the president of the Cheesecake Factory Bakery. So based on their financial statements, they've been gradually outdoing their previous years, not by a lot, just gradually. But in 2017, their numbers started to go down. So like their sales revenue and gross income started going down starting in 2017. So same thing with the balance sheet, it shows their numbers going down, and they had the lowest number of cash and short-term investments in 2013 and a higher depreciation and cost of goods sold, but they had higher total assets and accounts receivable. And then based off their cash flows, they had the highest net income before extraordinaries since 2013, but their net operating cash flow went down, and they've had a higher depreciation and deferred taxes and investment credit. So for my ratios that I chose, after looking at all of the documents, it kind of shows that they aren't really doing well as a company. It can be comparable to a lot of other fast casual, or a lot of other casual restaurants, casual sit-down restaurants. A lot of them have been cutting stores and going downhill. So I looked at the financials to see if they supported that, and their current ratio in millions was 52%, and so that's low, or 0.5251, and it means they can't pay back their short-term obligations well, and they can maybe make that higher by selling equipment. Their debt-to-equity ratio is 1.5. It's typical to have a high debt in the restaurant industry, but their liabilities have gone up minimally over time, and their stockholders' equity and their debt to equity ratio is high in the restaurant sector, and they are opening a lot of new locations though in 2018, so that can make their debt go up. So you just have to factor that in. Their working capital, so you can find that by subtracting the current liabilities from current assets. And they have a very negative working capital. From 2017, their 4 quarters, they've just had consistent negative working capital. And so their liabilities are exceeding their assets right now. Their profit margin has gone up, but they've also raised the prices of their items. So from 2014 to 2018, their margin's gone to 5.1%, 5.5, 6.1, and then 7. So they have potential to be high, but their numbers increasing is hopeful for them. And then labor cost is really important, and they were doing decent for labor costs. The 30 to 35% is what you want in a restaurant. And then 2013 they had 36%, 14 and 15 was 35%, but in 16 and 17 they've had a 37% labor cost. So they need to work on lowering that. And if I were an investor, I would see how they continue to perform in 2018, just because casual restaurants aren't doing as well right now. So I would wait if I were a creditor or investor to do business with them, because there's a lot of restaurants like Applebee's, Chili's, that are cutting down different stores, closing stores, because a lot of people aren't going to them as much and sales are going down drastically. It looks optimistic for the Cheesecake Factory because they are opening more stores, and they kind of have more of an edge because they're more of a higher class or classier casual restaurant, and their checks are higher, and people who are going to nice restaurants will go there, but they still are part of the chain casual restaurants. So I would look at drastically changing their brand and rebranding. They have over 250 menu items, which is kind of overwhelming, and I think they would do a lot better and save a lot of money and make more profit if they slashed their menu items down to more than half of that at least. Like Chili's went from 125 items to 75 in an effort to rebrand themselves. So I think that it's overwhelming at the Cheesecake Factory to have so many menu items and not really be solid in one particular area other than your desserts. So I would recommend to them to slash their menu items down and maybe try different concepts, like making a fast casual cheesecake restaurant where they have smaller seating area, less food options. So when people go in there, you don't have to have all the ingredients for all the items that they offer, and having a smaller area will cut down a lot of cost because their restaurants are immaculate and huge, and they don't utilize their space 24/7. So it would be better for them to have a smaller concept with less items, and then they could save a lot of money on running a restaurant, having everything on hand that they have to for over 250 items on the menu. So, because people are still going out to eat, they're just not going to casual restaurants as much, more fast casual. So if the Cheesecake Factory could rebrand themselves and look into doing that, then I think that it'd be very beneficial for them.